What's going on, team? Hey, happy Thursday. How about this? It's Thursday at 3:30 already. Isn't these weeks just fly by, huh? The market is still doing extremely well. Interest rates are still really low. There is quite a bit of refinance activity taking place still, and we are seeing still multiple offers and a lot of competition for properties in San Diego and still very low inventory. So all that stuff is still the same. So what's changing? Some things change. Some things stay the same. Derrick Evans, VA Home Loan Specialist here, NMLS 155010. Call or text me, email me if you want to buy or refi. Let's look at this stuff. So first thing we're going to look at today is mortgage bonds. Horrible day. Terrible day. Now, I didn't do a video yesterday. The day before, what I tell you, I was locking everything. And I did. And I'm glad I did. And my clients are glad I did. They'll never know the favor that I've done them. But that's okay. I don't take victory laps with them. I will take those victory laps right here. Okay. So bottom line, end of the day, what are we looking at here? Well, all right, we've fallen off a cliff. So this is not good. We do have a gap down scenario here. This is where we closed. This is where we opened the day. And then this is where we finished the day. Not good. Down 28 basis points here. As you can see, this graph is brought to you by mbshighway.com. Feel free to join if you want to get access to these charts. So we had the gap down. Now the gap did get filled here. You can see the wicks filled it. So it's not technically a gap down situation from a technical standpoint. We don't have to say, okay, well, that gap's going to get filled for sure. Not necessarily. But being down 28 basis points is not good. The one thing that we have going for us right now, the only thing that's holding on is this level of support right here, which has been good on several occasions. It was previously resistance. It turned into support. It was supporting right here after this sell-off. It supported right here after this sell-off. And only one day closed below it. Hit that Fibonacci, came back up off of it, has come down, touched here twice. Okay, back up. And now here we are back at that same spot at 101. Now this is the 2% Fannie Mae bond that we're looking at here. So what does that mean? Okay, well, if we really look at this, we've been in kind of a range, a box range here. Let's call it like this. This is where we've been. For how many days now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. Let's call it, 30 days. We've been in this range for rates. That's not a bad thing. It's not a bad thing to be in a consistent range and for rates to stay steady. But usually when you have these sort of consolidation patterns, you have to look back to see, well, where did we come from to get into the pattern? We came from up here. Right? We have this big sell-off here, which was all based on inflation fears, which are accurate. And reminder, we want to see mortgage bond prices going higher. That makes lower rates. Okay? Bond prices go higher, rates go down. The opposite is true. When we see bond prices go down like they did in this big sell-off, that makes rates go up. So when you look at a consolidation like this, you have to look at where we came from. So we came down and consolidated. Typically, when you consolidate, you continue on in the direction you came from. So we came from higher. That would lead us to believe that this consolidation will ultimately break out lower, causing higher rates. Now, why do I bring that up? We're going to come back to this in a second. Why do I bring that up? Here's a pro article today in CNBC. Big investors hate government bonds right now. Where to turn for income instead? So we know that a lot of these, especially these pro articles, are like, I don't want to say propaganda, but I mean, they're advertorials. They're advertisements for stuff. And you go in here and you look and see, okay, well, what are they saying? Well, you got to be a subscriber to get it. They're telling you to go other places to sell bonds. I've been saying this for how many years? Bonds are a terrible investment. They're terrible. Big institutions are buying real estate directly instead of bonds. Okay, I'm going to drop some truth bombs here. I'm going to go on a rant. Here it goes. We crashed. The real estate market crashed. The economy crashed. Everything crashed because of mortgage bonds. All right. What happened was Wall Street started making bonds. These weren't the mortgage bonds that, let's say, call it Ginnie Mae, Fannie Mae, Freddie Mac bonds. No, that's not what it was. Wall Street came in and said, we're going to make our own bonds. We're going to securitize mortgages. And that's the reason why everyone who had a heartbeat could get a mortgage, because Wall Street said, we'll take anybody. They were taking those people, those mortgages that they were creating, They were packaging them up, so adding multiple mortgages together. Let's call it, let's say, hundreds or thousands of mortgages into one bond. Then they were selling those bonds to governments, municipalities, pension funds, countries. Remember Iceland went bankrupt? Greece bankrupt? A lot of it had to do with these bonds that they were sold by Wall Street. How did they do that, though? The real scam in the crash was that Wall Street got the bond rating agencies to slap AAA ratings on triple F bonds. So these people thought they were investing in safe 780 credit score, 50% down, never made a late payment in their life borrowers, and they were really getting, some self-employed individual, a NINA, 100% no income, no asset. That's what NINA means. No income, no asset verification, 100% financing loan, subprime mortgage. That's what they were really investing in. And so what's happened is big investors don't like bonds anymore. They particularly don't like mortgage bonds anymore, which is why the Federal Reserve has to buy mortgage bonds, because who else is going to buy them? They don't. They're just skipping Wall Street now. Big investors are skipping Wall Street and saying, we still want real estate instead of bonds. In the past, these big investors, these big institutions, these countries, they thought they had to go through Wall Street. They thought it was safer to get something that went through SEC approval, something that went through regulators, something that had a rating agency overseeing it to make sure that it was legit. They thought that was safer. They were wrong. What they've realized is that it's safer to buy the real estate themselves, rent it out, and have that be your bond. So the reason big investors hate, it's not just government bonds that they hate all bonds, particularly mortgage bonds. They'd rather buy the real estate, and that's why enormous international companies and institutions are buying real estate directly, skipping the middleman and getting the actual product themselves. So this article set me off on that tangent, but I wanted you to know that's what happened. That's why there was a mortgage crisis. That's why there was a crash, because Wall Street got their grubby, dirty hands on the mortgage game, and they were taking these bad mortgages and making them look like good ones on paper and selling them. That was what caused the problem. If that hadn't gone on, it would not have been nearly as bad as it was. And as bad as it was, the worst case scenario, still less than 10 years later, you at break even on average for your property. So that tells you how strong and how bullish the movement in real estate really, really is. So bonds not looking good. We see the consolidation pattern. We know where we came from. We have a pretty good idea where we're going. Don't shoot the messenger, but I think we could see higher rates. Look, the Fed has infinite money. They could come in and start buying again, but they're supposed to be tapering, remember? They're supposed to be peeling back on their purchases. That's what they've said. That's what they're expected to do. So they would have to go and do the opposite of that. I think we could see more selling in bonds. We could see higher rates, team. All right, point of the video wasn't that. Point of the video, I may have to rename it. Point of the video was to talk about Bitcoin in relation to real estate. I don't know about you, but I know several people who have become Bitcoin millionaires. These people don't even have that many coins, but you don't need that many anymore. I mean, 300 coins, you're worth 15 million bucks. The first day that Bitcoin was for sale for $1 would get you 1,500 coins, which today would make you, extremely rich. $75 million, something like that. So anyhow, you don't need a ton, but a lot of them are doing what? Buying real estate, of course, if they are sellers of coins. Some of them are just absolute diamond hands. They won't sell it. They'll never sell it. Maybe they'll keep it forever because you can borrow against it, which is interesting. So let's take a quick look. Markets recovered today. Was pretty ugly at the beginning of the day. Markets came back. Oil still now above 70, up to almost 73 bucks. We're still liking that one. Remember I told you when we got into the low 60s, pull the trigger, purchase it, I said. And that's exactly what I also myself did. I reloaded, and it's been very, very good to me. So gold now down to 1750. Gold really taking a shellacking here. I feel bad for everyone who invests in gold. Crypto. Let's take a quick look here. Mid 47,000s for Bitcoin, Ethereum over 3,500. These are really the only two I'm looking at. So Bitcoin. Bitcoin is the one, and Ethereum is taking on some new characteristics that are very interesting in this regard as far as limited supply. Bitcoin has a limited supply. There's very little new supply that hits the market on a daily basis, and that is it is slowly eroding in a parabolic way to where there won't be any more new Bitcoin hitting the market and get to the full total of 21 million. So Bitcoin is engineered to go higher. Now, one of the things that you're going to see happen as Bitcoin continues to go, here, what was I going to show you? Bitcoin just formed a golden cross chart pattern, which has heralded big gains in the past. Now, in the past, when this golden cross has taken place, Bitcoin has gone up tremendously. We don't know if that's going to be the case this time or not, but there's other on-chain dynamics that are coming in that are showing that Bitcoin is likely to have a very good fourth quarter. I also believe that we've seen some institutional purchasing here that is going to get announced when people are forced to file their SEC forms in the fourth quarter stating what they bought in the third quarter. I believe in the third quarter, you're going to see a lot of other publicly traded companies who purchased Bitcoin. That is going to be announced, and that is going to be seen as a super bullish. Everyone who's short Bitcoin will have to get out of the way. You're going to see a pretty parabolic move higher. That's my guess. Also, there's a lot of people prognosticating we are going to see the SEC approve a Bitcoin ETF and potentially other crypto ETFs in the fourth quarter. What does SEC Gary Gensler have to say? He says he's short-staffed, and maybe this is an excuse, or maybe this is the reason why we haven't seen this happen yet. But he's got a lot of things on his plate. And one of the things that I saw here was Ray Dalio, who said, if Bitcoin is really successful, regulators will kill it. Bitcoin's already been really successful. And anyone who says this really doesn't understand how it works. So let me break this down to you in the most simple possible way. And then I'm going to tie it back to real estate for you so this all will make sense. Dalio, by the way, owns Bitcoin. He's admitted that. So he says if Bitcoin is too successful, the regulators will kill it. First of all, they can't. You can't kill Bitcoin because it's not a single thing. It is the whole network tied together, which is millions of people, and you just can't kill that. There's nothing you can do. There's no one who runs Bitcoin. There's no one to take over. There's nothing to grab. There's nothing to conquer. It is basically an open ledger. That's basically what it is. An open ledger of exchange for these things called Bitcoins, which is just basically a computer code. So you can't do that. Now, the one thing that the government could do, so we're going to go to, devil's advocate side here. The one thing the government could do is they could limit your ability to convert or bring cash from a crypto exchange to your bank. And I do know people, some of my rich crypto friends, who have had trouble transferring large sums of money to their bank. So what happens is, they'll have just like I do, they have their Bitcoin on a private wallet, and that could be a hardware wallet or it could be a software wallet, but you've got that wallet. Whenever you're ready to sell your Bitcoin, you send it to your exchange account like Coinbase, for example, or Binance or whatever. I would recommend everyone, when you do these exchanges, use Coinbase. I'm going to explain to you why in just a second, but use Coinbase. So you send it to Coinbase, you send your Bitcoin to Coinbase. Now you have one Bitcoin in Coinbase, you go and you sell it on the exchange for cash. Now you have dollars instead of Bitcoin. Then you need to take those dollars and you need to transfer it to your bank account. So what the government could do is they could tell the banks, because they basically control the banks due to insurance, the FDIC, the Federal Reserve, all that stuff. So they could tell the banks, do not accept any large deposits of cash from crypto exchanges, or they could say put them on hold. They all need to be investigated, and basically just create this huge traffic jam where people are transferring money to the banks and it's just sitting there and you can't get it. That's the only thing they could do. Now, the reason why that is starting to go away as a possibility is because you have companies like Coinbase who are publicly traded. They're regulated by the SEC. They are on the exchange. You can buy shares of Coinbase, COIN. That is the ticker, coin. So here is this company, Coinbase, which is an exchange for you to get dollars for your Bitcoin, that's publicly traded, that's regulated, that could be investigated by the SEC, could be sued by the SEC potentially. I believe they actually were or was threatened at some point for some reason. So it is very difficult for the government to justify shutting something like that down when it is a part of a business of a company that's regulated by the government. The government could go to Coinbase and say, "Hey, we've got this problem. There's these racketeers that are, using Bitcoin, and we think they're using your exchange." And then Coinbase would have to go, "Okay, here's our data. Investigate. Go ahead behind the scenes." But to go to not do that, to go just over the top of that and say, "Hey, you've got to shut this down," that's becoming less and less possible. Also, Tesla owns Bitcoin. MicroStrategy owns a tremendous amount of Bitcoin. Square owns Bitcoin. There are another 100 other publicly traded companies that own some amount of Bitcoin. If the government does anything to specifically and intentionally thwart the use of it, you could see lawsuits come from every single one of those companies saying, "Hey, you're messing with our balance sheet. You're messing with our company, essentially, by making these regulations, by making these rules, by setting these mandates." So you could see lawsuits. So we have protection now. Every company that owns Bitcoin is a protector of the little guy who owns Bitcoin because their interests are aligned. So the more companies that buy Bitcoin that are publicly traded, the better. But particularly, the more exchanges we can have that go public, the better, because now you have them regulated and investigatable by the government without necessarily us even knowing about it. So you can't really go over the top of that. So this is really not becoming a possibility anymore. And people like Ray Dalio clearly don't know how Bitcoin works or, what the regulators actually have at their fingertips to do anything with it. Remember, Bitcoin has already been declared personal property by the SEC. Also, you also have Grayscale Bitcoin Trust, GBTC. This has been around for a long time. This is not an ETF. It is a trust. And this trust just owns Bitcoins. And when you buy into the trust, you are just getting your share of the Bitcoins that this trust owns. So it's not quite like an ETF. In fact, it trades at a discount to the actual value of Bitcoin of almost 10%, which is crazy. So you can buy it on any given day right now, and you're paying less than if you bought Bitcoin directly. Isn't that wild? So this here is another situation where if the price of Bitcoin got really high, let's say Bitcoin went to $1 million, and all of a sudden, there's people who want to try to cash in some of that. You could just, if you own GBTC, which I own a ton of this, you could just sell that in your Fidelity, Charles Schwab, TD Ameritrade account, whatever, Scottrade, etc. And then you would have cash now in your brokerage account. Now, is the government going to go ahead and say that you can't transfer that money to your bank too? So it's become increasingly difficult for the government to be able to do anything to really kill Bitcoin or even stifle it. Maybe they could for a short period of time. They could crash it probably. If they came out and said, "We're going to do this, we're going to stop Bitcoin exchanges from sending cash to banks," even if they just said that and didn't even really do it or have approval to do it, they could probably cause a crash in crypto, but they can't kill it. That's really becoming a non-possibility anymore. And the reason why that's important is because if this fourth quarter lines up the way that I expect it to, with the announcement of ETFs, crypto ETFs, particularly Bitcoin ETFs, with the announcement of more institutions purchasing Bitcoin in the third quarter of this year, you're going to see this golden cross really come through. Let's see, do they actually give a picture? No, it's a Pro article. You're going to see this golden cross really come through again as a great indicator that Bitcoin is going to make a huge move higher. We could see 70, 80,000. We could see 100,000 before the end of the year in Bitcoin. So what is going to happen? What do people do when they want to cash out of Bitcoin? Well, everyone that I know who isn't totally diamond-handed, who is willing to sell some Bitcoin here and there to diversify their investments, these people are buying real estate. They're buying real estate. They're buying real estate with their Bitcoin. They're converting it to cash, buying hard asset or real estate, rental properties, Airbnbs, you name it. That's what they're doing with it. So the success, I think, of Bitcoin will prove to be, well, remember, inflation is good for Bitcoin and inflation is good for real estate. So as Bitcoin has success, I think you're going to see it tied to real estate because there's going to be a lot of Bitcoin billionaires out there, made out there. There already are, and they will be buying real estate. So that is the gist of it. and a number of soapboxes today. I got to get back to work. You guys have a great day, and I will talk to you soon.